Hi everyone, it's Jack back with another video. This time on Rivian, only a short one this time. IPO'd last year to well over $100 billion market cap. A lot of fanfare. Is this the next Tesla? Blah blah blah. The stock has not panned out whatsoever. 52-week high, $179. 52-week low of 19. Absolutely brutal. Down 71% in 2022 alone. Has seen a decent amount of short interest due to the obviousness of the overvaluation to a well over $100 billion company making no cars, effectively, almost zero revenue. It's decently above its 52-week low of $19 now at 29. So it seems like the worst is behind them. It seems like they've seen the bottom. Stock is up 10% today on some good news. Is it now investable? That's what I want to establish. The good news is that Rivian seems to be on target. They announced the production totals for the second quarter, and the company produced over 4,000 vehicles at its manufacturing facility in Illinois and delivered over 4,000 during the same period. These remain in line with the company's expectations, and it believes it is on track to deliver 25,000 vehicles this year, which is of course nowhere near where it needs to be. These vehicles are typically in the range of $60,000 to $70,000, 25,000 times 70,000. Not really going to move the needle for a vehicle manufacturing company when you consider the volumes that the traditional automakers or even Tesla are shifting at this stage. But it's a start. It shows that Rivian is making progress, and importantly, it's actually generating some revenue, and it's not just a complete bust of a company. Rivian's mainly focused on the truck space, which a few years ago might have seemed like a bright idea. There wasn't a lot of competition in this area. However, with the F-150 Lightning, this seems like the competition has really heated up. Not to mention the Tesla Cybertruck whenever that happens. F-150 is the best-selling vehicle in America, and the F-150 Lightning, I don't imagine is going to change that much. I think this is going to be a solid offering over the years. I think this is really stiff competition for Rivian at a similar price point. Admittedly, these cars look decent. On road testing, people have seen them very well reviewed. Range is somewhere between 260 and 400 for the R1T and 260 to 320 miles on the R1S. Both very impressive. Both kind of reasonable starting price, around $70,000 for this type of vehicle. Everything seems normal here. I just think if this came out in 2015, say, or if it came out around the time the Model S and the Model Y were being produced, this would be an incredible offering. But right now, there's a lot of competition in this space, and I think the Ford F-150 Lightning particularly is a tough offering to compete with. It has years and years and years of brand equity, that Ford nameplate, and it's going to be tough to take on for a new starter. There's definitely been a lot of positive demand for these vehicles. The R1T was named Motor Trend's 2022 Truck of the Year. Of course, this is just one outlet, but they continue to grow demand. They've got a backlog of over 90,000 R1 pre-orders. Amazon has an initial order of over 100,000 EDVs. They're focusing on development of future technologies and the R2 product line. But this is from the shareholder letter. The CEO is clearly stating that the journey ahead won't be easy. They need to be working on path to profitability, development of these future technologies, and this all costs a lot of money. Money is not an infinite resource, and this could be very tough for this company to maintain. And the path to profitability is very murky ahead, whereas companies that it's competing with are already highly profitable. Tesla, for example, can leverage that profitability to build things much faster. As of the most recent filing, the company has $16 billion in cash and just $1 billion in debt. Most of this is from the proceeds from the IPO, $13.7 billion, and that looks smarter and smarter every day IPO, and at the time it did. While it's been brutal for shareholders on the public markets, internally for the company, they generated an incredible amount of cash at what looked like possibly the best time to IPO in history. They say they have a good roadmap ahead to ensure that the $17 billion of cash they had on the balance sheet can support the 2025 launch, which again is projecting a long time in the future, and they're on their R2 vehicle. So there's a high degree of projection here. To think that $17 billion for an auto company will last that long, who knows? I believe it probably can, but this is a stretch. They of course can take on some debt in this time, maybe share dilutions, but these are not positive things for shareholders. Before I get into valuation, I want to talk about the analyst estimates, because this is clearly a company that is a degree of projection. You're not buying what Rivian is now, you're buying what you think it'll be in 5 to 10 years. In the next few years, the revenue is predicted to go up at a decent rate. $2 billion analyst expectations in 2022, or just under. By 2023, at the end of 2023, they're expecting $6.5 billion, and that to almost double again to $12.4 billion by December 2024. Now, to me, these analyst estimates look very optimistic. 6 times revenue in 2 years at $2 billion scale would be very impressive. However, unlike Tesla is now, how long before this company is genuinely profitable? Even at these estimates, this puts the earnings per share at negative 4.89 by 2024. That is going to be a huge loss. Vehicle manufacture is an expensive game, and they do not have the luxury, like Tesla for example, of having a huge market cap which they can tap to generate funds by share releases. That was really the turning point for Tesla, is they could fund itself by using its own equity. Rivian cannot do this at the minute sustainably because it has a $26 billion market cap. I fear possible dilution in the future for shareholders, but what I fear far more than this is a company with 150 plus price to sales. That is absolutely obscene. Even if this comes down significantly while it's unprofitable, this is still going to be an enormously highly valued company. 150 plus price to sale is obscene in an inflationary environment with the company this far away from profitability. Even a 15 price to sales looks very, very high in this current environment. I think this makes it still very much at risk of a significant price drop. With that being said, one of the saving grace for this company is its cash position. Price to net cash of 1.99 has $16 billion or so in cash on the balance sheet, and the market cap right now is $26 billion. That is basically saying that the rest of the Rivian business is only worth $10 billion, which, considering they do very little revenue, is probably quite apt. But again, you're investing on what this company could be in the future, and if this company turns into Tesla for trucks, then it could be an enormously profitable investment over the next 10 plus years. However, I think there's a large degree of projection here. There's a lot of things that can go wrong. There's a lot of competition in the near future, and it's something that I would not be personally comfortable investing in right now. But of course, I'm not a financial advisor. You should do your own research and due diligence. Come up with your own opinion on Rivian. I like where it's going, but I just don't think this is anywhere near enough to make this investable right now. But again, just my opinion. Let me know what you think in the comments below. Like and subscribe if you enjoy the content. I'll see you again next time.